What's going on, traders? Welcome back to the Trading Dad Chronicles. So let's do a market report analysis here and see what NQ did today and see what kind of upcoming levels that we have. This report is going to provide a critical outlook at the current market and give you guys some actionable insights that you can use for your everyday trading. We'll examine the key levels that are driving price action and what they mean for our trading strategies. Our goal is to equip you with a clear understanding of the current landscape and potential catalyst. The NDX is currently operating within a positive gamma environment, which fundamentally suppresses volatility and promotes rotational trading. We've seen NQ consistently hold above the dealer pivot, signaling robust underlying support. Responsive buyers have repeatedly defended the prior day value area low, demonstrating their high conviction. This compression directly beneath the call trigger suggests a coiled spring, not distribution, setting the stage for potential moves. Now let's look at the specific resistance levels that could trigger a bullish squeeze. Building on our understanding of the current market regime, let's pinpoint the critical resistance levels. The call trigger between 29,475 and 29,500 is paramount. Acceptance above this zone will likely ignite the squeeze. The call wall at 29,600 represents the first significant hurdle for dealers and our initial target. Should that break, the squeeze target at 29,780 to 29,800 comes into play, forcing dealers to chase. A full extension could see us reach 29,900, marking a full trend day. But we also need to understand our downside protection, so let's turn to the major support levels. While we're eyeing the upside potential, it's crucial to define our defensive zones and acceleration triggers. The dealer pivot spanning 29,330 to 29,360 is the most important intraday level to maintain our bullish structure. Below that, the responsive buyer zone at 29,220 has proven to absorb selling pressure effectively. The put wall at 29,000 acts as our primary downside support floor. A breach here would signal a significant sentiment shift. Finally, below 28,850, we enter the acceleration zone to the downside, where negative gamma behavior will rapidly expand volatilely. This brings us to tactical read on the 29,500 level, which is truly a make or break point. The 29,500 level is our make or break point for tomorrow's session. It dictates whether we see continued upside or a return to rotational chop. We've seen the market hold critical support levels, and now we're testing a key resistance. Holding above 29,500 forces dealers to hedge their upside exposure, creating a self-fulfilling upward movement. Conversely, staying below this level suggests that we'll remain range-bound with positive gamma weakening. Our strategic bias remains bullish as long as the dealer pivot holds. This tactical read sets the stage for our high probability execution strategies. Building on the tactical read, let's outline the high probability trade setups. We're focusing on precise entry and exit points to capitalize on the anticipated market moves. For long positions, we're looking at entries around the 29,330 to 29,360 dealer pivot or confirmed acceptance above 29,500. Confirmation comes from delta expansion and improving breadth, especially with QQQ leadership. Our upside targets are 29,600, 29,720, and 29,800. For shorts, we'd consider a failed acceptance above 29,500 or a decisive break below the 29,330 pivot. We'll confirm these with failed breakouts and VIX expansion. Downside targets are 29,220, 29,000, and 28,850. These setups feed directly into our strategic risk-reward outlook. Our analysis reveals an asymmetric upside potential, driven by the compression under 29,500 call trigger. This suggests a coiled spring effect, where a break could trigger significant delta hedging. We see institutional absorption at play, with the market holding above the dealer pivot despite resistance. This indicates stable institution inventory. However, we must be wary of fakeouts, breakouts above 29,500. Tight stops below 29,460 are crucial. Our primary execution strategy is to buy the 29,500 breakout, with delta expansion confirmation. We'll maintain a bullish bias as long as the 29,330 pivot holds, targeting the 29,800 squeeze zone on the trigger break. Meet me back here tomorrow for tomorrow's analysis and the weekly outlook on NQ.